We want to look at questions and answers, so we don't want to overflog the lecture. That's why it sounds like we're a bit brief, like the last diet where we spend over 6 to 10 lectures on chapter 2. We want to avoid that so that we can have time to tackle questions and also have ample time to finish lectures, finish the 16 chapters, and as we have enough time, we'll be able to prepare significantly by reviewing past questions and answers by ourselves to ensure that we're adequately ready for the AAA paper. Okay, so we are speaking to the fourth unit, which is money laundering, the fourth unit. Another area the examiner tests quite frequently, and it's an area in practice that we need to be conversant with as chartered accountants and as auditors. So we'll be looking at money laundering in Unit 4, Section 1, speaking to the definition of money laundering and the regulation that guides and regulates money laundering. We'll also be speaking to the obligations placed on professional firms, mostly chartered accountant, firm of chartered accountants, lawyers, barristers, and the duty of confidentiality and money laundering generally. So the definition of money laundering speaks to a process by which criminals conceal true origin, ownership of proceeds from criminal activities, and they permeate around drug trafficking, terrorism, theft, tax evasion, fraud. So money laundering is dirty money laundered to make it look clean. It's dirty money laundered to appear clean. So it's a process by which criminals conceal true origin, ownership of proceeds from criminal activities. So for example, drug trafficking, terrorism, theft, tax evasion, fraudulent activities, monies and proceeds gotten from dirty activities, they launder it to make it appear clean. So that's generally the concept and definition of money laundering. So we have criminal offenses speaking to possession, dealing with or concealing proceeds of crime, crime against the state, crime against humanity, and also attempting conspiracy, inciting, aiding, and abetting these offenses. So professionals could fall into the second category by knowingly conspiring with these criminals, aiding and abetting them could implicate us as professionals and make us also criminals if we aid and abet such activities. So generally, these are criminal offenses from those that primarily bring up these activities and those that secondarily shield them, incite, aid, and abet them. Speaking to professionals, and this is where we come in. So failing to inform appropriate authorities, especially when we are suspicious of such activities, the regulatory sector like the EFCC in Nigeria, failing to inform them is also a breach of our duties as chartered accountants or as professional accountants in the business space, especially where we find ourselves auditing or working for these money launderers, to say. So tipping off, speaking to making a disclosure likely to prejudice investigation is also a crime. When you are aware that your client, who is a money launderer, is about to be convicted or be caught, tipping off could mean giving him a tip to either escape or disappear, not to be brought to book. or investigations to be carried out. So tipping off is also a criminal offense. Failing to make informed and appropriate report on suspicion of money laundering is also an offense. It's a criminal offense. So let's take note of suspicion. It's not really defined, but it's in between speculation and proof. So your suspicion could be right, it could be wrong. But our duty as citizens and most importantly as chartered accountants is to report it. So where investigations are carried out, and they are mostly carried out anonymously, you will not be indicted because you reported based on the best of your knowledge and to clear your conscience of whatever it is that you saw. Because in auditing or in investigation or in crime reporting, they say if you see something, you say something. So suspicion may not really be defined, and suspicion is not a basis to convict a money launderer. You have to have evidence. So investigations will be carried out to ensure that that suspicion comes up with actual proofs. Very important. So there are defenses against money laundering. Reports made, and the intention to report, plus reasonable excuse of fear of violence, speaking to either acquisition of property for adequate consideration in good faith, could be an adequate defense. So where a report is to be made or an intention to report, but either threat to life could deter someone from reporting, or a professional speaking to either he's afraid to lose his life or her life, or of violence, is tenable and a proper defense before the court of law. So acquiring or using property for adequate consideration in good faith is also tenable where you are not aware those funds or money was laundered, and it must be proven beyond reasonable doubt. So these are defenses. We've spoken to criminal offenses and the general definition of money laundering. Okay, so let's look at the regulation of money laundering in Nigeria and also globally. So we have the global efforts to curb this menace, and the Financial Action Task Force on Money Laundering drives legal provisions globally. So this body helps with country-specific membership and delegations. Africa, Europe, and several continents come together to form this task force on money laundering, and they drive provisions, laws, regulations globally to ensure that this menace is curbed and brought to the barest minimum. We also have in Nigeria specifically, we have the Money Laundering and Prohibition Act of 2021 that came up with several laws like the EFCC, the NFIU, Nigerian Finance Intelligence Unit, and it implements the Financial Action Task Force provisions globally, because Nigeria is a member and most of their recommendations are implemented. And if you look at most of the investigations carried out by some of our past EFCC chairmen or women, they are in collaboration with this task force globally. So where money is being laundered to countries, like you hear so person's loot, so person's loot. This person carried money to the UK, to the US, he looted it and kept it there. Most of these task force are collaborated with to ensure that investigations are carried out, and most of these funds are proven to be laundered, and also the task force helps with proceedings and procedures to be met to repatriate such funds back to their actual destinations. So Nigeria has recovered some funds Based on these global efforts and synergy with these organizations globally to fight money laundering and also to fight corruption and the export of our funds illegally to countries and their investments, to help fight and curb these issues. Okay, so these are the regulations, global and local, that help us or has helped nations collaborate to fight money laundering. So let's look at obligations on professional firms, accountants like you and me, auditors like you and me, lawyers, to fight money laundering. So for professional firms, they are to implement systems, controls, procedures to prevent money laundering. So systems, control, procedures to prevent money laundering are obligations of professional firms, especially that of chartered accountants. And ICAN, it's very particular about this because any licensed ICAN firm has to ensure this. And there's a circular, there is a document, there is a statement to that effect for audit firms under ICAN to be guided accordingly. And the objective is not to fall victim of aiders and abettors of money laundering. This is very important. So one of them is to appoint a money laundering reporting officer who is to receive and also report money laundering suspicions. So it's the obligation of professional firms to implement systems of internal controls, procedures to prevent money laundering by appointing, number one, a money laundering reporting officer who is to receive and report any suspicion of money laundering. Also, they are to establish and enhance record-keeping systems for transactions above 5 years. Transactions above 5 years. And client identification and also verification of documents like international passport, driver's license, utility bill, certificate of incorporation of the company where it's a company. So documents are to be cited and certified as original. So these records must be kept and the trails to ensure that money laundering activities are investigated where they come up. So professional firms should ensure these are in place and records are to be kept above 5 years to ensure that a trail and investigations are enhanced. So where destruction of such records below 5 years are found out by authorities, then such professional firms or accountants are culpable. They are liable to litigations and court issues. So these are laws for professional firms to ensure that records are kept above 5 years and clients' details are verified, documents are necessarily filed and kept to ensure that identities are traced to most of these investments or monies laundered. Also, procedure for reporting suspicion internally should be provided by audit firms, aside that provided for ICAN, by ICAN and the regulatory bodies. Other procedures for reporting suspicions internally should be the obligation of firms. They should have policies, internal and internal policies that should be complied with by all staff. They should also train those staffs on the detection and reporting of any suspicion of money laundering. And this will make them avoid penalties for non-compliance, because once professional firms, auditors, chartered accountants are found guilty or liable or found wanting in the area of money laundering, aiding and abetting, there are unlimited fines to the point of imprisonment for principal officers of that firm. So the law is very clear on this. Penalties for compliance can be very stringent, and we need to be very careful and watch this, especially most of us that are in practice. Okay, so that's briefly on the session speaking to the obligations of professional firms to report suspicion and to ensure internal controls, documents, and records are kept of their clients for a particular period of time. Okay, and the final section is the duty of confidentiality and money laundering. The normal professional duty of confidentiality is not a defense for money laundering. So when money laundering activities are proven by a professional firm or a professional, you don't have any duty of confidentiality. You've been stripped of that duty. So you have a duty to the public to ensure that a proven case of money laundering is reported appropriately. Very important. So our normal professional duty of confidentiality to financial statements, to every secret records, every privileged records we have during the course of our stay or our service to that client, to that organization, will no longer be tenable when it comes to the issue of money laundering. When it comes to the issue of money laundering, we have the duty to the public to disclose and report any suspicious activity. This is very important. So there are statutory protection for practitioners from breach of confidence claims if reports are made in good faith to the appropriate authority. So even if you report your suspicion and is unfounded, that is done in good faith, and there will not be repercussions for such reports. So there's a statutory protection for all chartered accountants or practitioners who report suspicion of money laundering in good faith. So there's also the tipping off risks of money laundering, and auditors must be cautious not to reveal their suspicion to the client. So you cannot tip a client. You'll be fighting against the law and against humanity, and that's not in the interest of the public, the protection of the public. So we must ensure that we don't tip off our clients. You don't reveal your suspicion to clients, you reveal it to the appropriate authorities. You either, if you are scared of the appropriate authorities, of maybe your protection, your safety, you could seek legal advice from your solicitors or barristers. Very important. So through a statement of circumstance on resignation or professional clearance letter, legal advice is crucial in such situations where you found out your client is a money launderer or a criminal. You have to pragmatically and very wisely know the course of action so you don't endanger yourself as a professional in the interest of the public. Very important. So you have to stay safe before the public is also ensured of their safety. So a statement of circumstances on resigning, maybe you could resign from the engagement with the client after suspicion of money laundering, or get a professional clearance letter from your professional body like ICAN, or seek legal advice, which is crucial in such situations where a professional or a firm finds out the person is dealing with a money launderer. There's also legal privilege, and information received under legal privilege may prevent reporting, but this is very rare in practice. So the privilege of information under this legal privilege in quote may prevent you from reporting, but it's very rare. So professionals choose to either resign or get clearance letter from their professional body, or seek legal advice. There are ways out of such quagmires or such dilemmas for professionals. So those are our duties of confidentiality when it comes to money laundering. All right, so that will be the end of that short unit, even though it's not short in the study text, but relatively short anyway, just a little more flesh. But we got the bullet points for it, so we could speak to that and not take much of our time. So any question on the money laundering unit, so that we can go to the final unit of chapter 2. Any question, observation, contribution? Any questions? Please feel free to ask any questions. Okay, the absence of none, let's look at the last unit for chapter 2, which is consideration of laws and regulations in an audit of financial statements. International Standards on Auditing 250, another frequent area that is being tested in the past questions. So let's look at the legal environment and non-compliance. So this standard speaks to obtaining general understanding of the legal and regulatory framework of an entity we are auditing, their compliance, which is part of ISA 315 of understanding the entity. So this ISA speaks to auditors obtaining general understanding of the legal and regulatory framework of the entity's compliance. And that has to do with the industry, the sector where this organization is domiciled. So you can't audit a banking sector as you audit a pharmaceutical sector. There are two different industries. So the FMCG is different from the banking space. So you must, as auditors, obtain general understanding. So the auditor's requirement based on this ISA is to obtain general understanding of the legal and regulatory framework of the entity's compliance to laws and regulations. Also, the auditor is to obtain sufficient and appropriate evidence for compliance with these same laws that directly affect material amounts and disclosures. So, after understanding and the engagement has commenced, the auditors must obtain sufficient appropriate evidence for compliance with these laws that directly affects material amounts and disclosures in the financial statements. This is very important. Also, performance of procedures, inquiry with management, inspection of correspondence with authorities independently without the consent of management is also very important for auditors. So in performing procedures, they need to inquire, have there been remittances, checking balances, verification of balances, independent confirmations with authorities are very important in consideration of laws, compliance with laws and regulations in the audit of financial statements. Auditors need to also remain alert for non-compliance with other audit procedures as found out during the audit work. So auditors need to remain alert for non-compliance and flag these to management. Very important. Also, obtaining written representations from management on disclosures of all known and suspected non-compliance is key. So, verbal, oral representations and evidences are not tenable in audits. And the standard is written representations must be obtained by auditors from management on the disclosure of known and suspected non-compliance. Very important. And also the documentation of the same of all identified and suspected non-compliance and discussions on the resolutions and remediations of the same are very important from the auditors to management. So obtaining these written representations and documenting the same in a dialogue, conversation with management, and seeing how to resolve them is key. So action by auditors in event of non-compliance or suspected non-compliance, auditors need to understand the nature and circumstances of the act. So where management is obstinate or are obstinate and auditors have found out significant non-compliance issues or suspected non-compliance, they need to understand the nature, circumstances surrounding this non-compliance first. They need to evaluate the possible effect, material effects in the sense that if this is brought to the fore of the shareholders, it could affect their decision, economic decisions. So the evaluation of the possible effect on the financial statements and the items of the same, it's necessary for auditors to evaluate. And also for suspected non-compliance, the discussion with management, if management still refuse to comply, auditors need to seek legal advice. So where there is a recalcitrant and consistent refusal to comply, auditors will need to seek legal advice. Very, very key. And also, if sufficient evidence of suspected non-compliance cannot be provided by the auditors, they need to consider the impact on the audit report. So whatever non-compliance is found out by the auditors, it has to be with evidence. And where there's no evidence, they have to consider the impact on the report and look at the scope, limitation in provision or in gathering those evidence. You need to also consider the impact on other audit areas, that's in performing their overall risk assessment of such non-compliance. How does it impact other areas of the financial statement? If taxes are not remitted, which component of the financial statements will be affected and impacted negatively? So they need to consider the high risk areas in consideration of the laws and regulations and their compliance, the audit of financial statements. So they need to also consider reporting non-compliance to those charged with governance, shareholders and authorities. Where management have refused to comply, then it needs to be escalated to the owners of the company and also authorities like the SEC and the CAC and every regulatory commission where management has refused, and also the shareholders maybe have refused to comply, and it can be escalated by the auditors. Okay, so that's basically the consideration of laws and regulations in the audit of financial statements, which is also an area that is tested by case studies and by scenario-based areas by the examiner. So do we have any question based on ISA 250 so that we can briefly look at updates in the 2025 syllabus on chapter 2? So this is our current study text. Of course, it significantly covers what is in the current syllabus, but we need to look at one or two updates on the syllabus review in chapter 2. Any question so far on unit 5? Any contribution, any addition, any observation? Okay. All right. I believe it's sinking slowly. All right. So let's look at key updates in the 2025 syllabus on chapter 2. Now, the syllabus stressed the Companies and Allied Matters Act, which was introduced in 2020. It has already been in the 2021 ICAN study text, of course, which overhauled the outdated CAMA 2004 laws, modernizing corporate regulation in Nigeria. Then for governance and ICFR, which is internal control over financial reporting, is required by all companies except for small companies with single members or one or two owners, very small companies. So for governance, the update is that ICFR requires companies to appoint board of directors, of course, based on the CAMA, auditors, and audit committee, of course, it has always been. It also mandates the CEO and the CFO to certify the financial statements, confirming that internal control and reporting are reliable, and there are no non-compliance that attracts sanctions. So, of course, this appointment has been in the update of 2020 CAMA, but then this ICFR came up in 2024, requiring all CEOs and CFOs, that's the Chief Executive Officer and the Chief Financial Officer, to certify financial statements confirming that internal control, ICFR, and reporting reliability on the same financial statements, and there are no compliance that attract sanctions. So CAMA mandates based on the ICFR corporate governance promulgation with FRCN to ensure this is implemented. The financial reporting, the second one is the Financial Reporting Council Act, the responsibilities of 2011. It was updated in 2023 and is enforced from January 2024. So our last audit text was updated in 2021. So you can see why ICAN has come up with or comes up with regular reviews. The 2021 FRC Act has been updated in 2023 and enforced from January 2024 last year significantly, and it has expanded the Financial Reporting Council's powers. And speaking to Keller's question, you can see some of these crashes was as a result or has come up with these stringent and updates from regulators to help reduce the corporate collapse of most of these companies. And the FRC's powers have been expanded to implement and ensure this is brought to fruition. So the key governance and ICFR elements includes broader oversight of public interest companies, including PLCs, listed companies, entities with turnover of above 30 billion. And any government-linked project, government-linked company with above 1 billion naira is subject to these key governance and ICFR elements. Very important. It also requires, very importantly, that CEOs and CFOs certify financial statements and ICFR are performed for public interest companies. So I worked, before moving to my current place of assignment or current company, the former public interest company is a government entity in the healthcare space where I worked. We came under heavily this ICFR audit, and we had to outsource it to a firm. We also have the external auditors that will certify that that firm has done the ICFR engagement. So the enforcement timelines was from 2024 financial statements. And our 2024 financial statements came under that heavy scrutiny of ICFR, which the internal auditor, when I worked in that space, was heavily engaged. He came up with several questions, your risk management policy, your internal audit plan, your audit, a lot of testings, and it was rigorous. And this is a result of the FRCN's updates that were kicked off from January 2024. So the FRCN has been empowered with stronger enforcement powers, empowered to penalize, and also required to ask and request disclosures from companies to the public. So it really has been an activity and a dispensation to hold companies and directors responsible to the public. So it's becoming more stringent, and I believe it will result or culminate in the reduction of corporate collapse and also these issues of companies going under because of mismanagement. The third one is not really an update, but then it's been stressed in the new syllabus on the ICAN Act and proposed amendments. The ICAN Act of 1965 is under review currently, and proposed amendments will be released aimed at modernizing ICAN's mandate and also enforcement powers in the areas of governance, regulating, audits, and accountants generally to serve the public better and be more accountable and responsible in helping businesses thrive. Very important. So key concerns on that are that the amendments may expand ICAN's regulatory scope into areas regulated by other professional bodies. So ICAN is still working on this, and updates will be provided as soon as possible. Also, areas of stakeholder interest or stakeholder resistance, emphasizing preserving boundaries and avoiding conflict with bodies like CITN, where ICAN have been having this long fracas and court case. So proposed amendments are coming to foster synergy and work together with such bodies to avoid such conflicts in future. And number 4 in the update is the FRC guidance on ICFR. So there are publications, I'll be sharing them on the platform on the FRC's publication on guidance on management reports on internal controls over financial reporting, and guidance on assurance engagement reports on ICFR, which is the ICFR 1. So the updates starting from January 2024, the Federal Financial Reporting Council has published guidance on management reports on ICFR, where the CEO and the CFO must certify that internal controls after it has been audited, which mostly the first engagement for 2024 was outsourced to professional firms, so that independents and mostly the internal auditors could learn on how this ICFR works and should work. Guidance have been provided on that by FRC and also on the assurance engagement on those reports. So these define the responsibilities of management and auditors, internal and external, in evaluating, reporting, and testing the design and operation of ICFR. Very important, because the production of financial reports permeates around the internal controls of the company. Also, the requirement for internal and external audit assurance over the ICFR tied to the financial reporting is part of the definitions in this guidance. So that's one area the FRC has come strongly to update from 2024, and it's an update we need to take note of. We also have the same Nigerian Code of Corporate Governance for 2018, issued by the same Financial Reporting Council, which applies to public companies, regulated entities, and some large private firms. The code was updated for banks, I think, in 2023. I'm not sure now, but I'll provide that document also in an attachment for banks only, for the Nigerian Code of Corporate Governance. It was updated for public listed and public interest entities. The 2018 will suffice, but I think that of the bank was updated, I think in 2020, either between 2020 or 2023, I'm not sure now, but I'll provide the document for our perusal and further action. So for this 2018, it still remains the government requirements on a fit-for-purpose board structure, which is generally what is the requirement for public interest and public listed companies. Where non-executive directors, there has to be a mix, and the quorum mechanisms required for meetings are stipulated in these requirements. Also, the establishment of audit and risk committees is in the Corporate Governance Act of 2018. Clear policies on internal audit function, oversights, and ethics, and also mandatory annual disclosure of governance compliance and the financial statements via the Financial Reporting Council, which is for listed companies, to the Nigerian Stock Exchange by every year 31st of March. That mandatory disclosure must reach the FRC, and for listed companies must reach the Nigerian Stock Exchange by 31st of March, are all key features of the Nigerian Code of Corporate Governance of 2018. So these are the summary table of the updates in the study text for Chapter 2. We have the Companies and Allied Matters Act that was stressed, requiring directors and audit committee mandates, and also the CEO and the CFO certification. So the FRC Act and guidelines expanded the scope, and the stricter enforcement in the current dispensation for public interest entities was provided. The ICAN Act and Amendment Bill proposed regulatory expansion and concerns for overlaps. In the Nigerian Code of Corporate Governance 2018, the governance framework, board, risk, audit, and the stressing of internal audits, and these committees are what was enshrined and stressed in the Nigerian Code of Corporate Governance of 2018. Then more prominently is the FRCN ICFR guidance on reporting and assurance of ICFR, which we spoke to. So those are the key updates on the syllabus on Chapter 2, the regulatory environment. So ladies and gentlemen, we have come to the end of Chapter 2, which we were able to achieve in 2 lectures. And we're supposed to dive into past questions and answers relating to this Chapter 2 that were tested by the examiner from Pathfinders dating back from November 2014 to last diet, May 2025. There are a lot of questions that have come up, and we're supposed to be looking at them, but I doubt if we can start that in 8 minutes. So I'll suggest we do that in the next class, which is on Thursday. We look at the past questions relating to Chapter 2 so that we can discuss and look at it critically and how they apply graphically to the chapter we just spoke to. Okay, so having looked at the 5 units and also the key updates, are there any questions based on the regulatory environment? Any question, any contribution, any concern, any suggestion based on what we've looked at? Any question?
None from my end. What I just feel, sir. Good evening, sir.
Yeah, good evening, Sammy. Nice to have you.
Okay. I think with the new update, those are the part I feel which I still need probably few more clarifications. I see them like they are a bit very brief and probably not that comprehensive.
Okay.
You know, maybe because of time, probably next class we can just still touch a bit, if possible, sir.
Okay. We still have for like 5 minutes, so let me go back to the updates in this next 5 minutes and see if they will help. Yes. Okay. So let me start from the CAMA. The first update spoke to CAMA on the current syllabus, and it was stressed, though the CAMA was not updated between the time ICAN's first study pack, which was 2021, and 2025. It was just an overhaul and a restressing of the fact that CAMA and FRC are working together to ensure that the content and everything that is provided in the corporate governance framework is enforced afresh and thoroughly. So it's more of restressing and restating what has been. So they are saying there are requirements for companies, except for small single-member companies, to appoint board of directors, auditors, and an audit committee. So they found out a lot of companies are not adhering to some of these promulgations by CAMA. So a stressing and enforcement of this is ensured in this current dispensation and in the 2020 syllabus. Like some companies find out that they don't even have committees. They just have a board, and they are public listed companies, public interest companies. They just have a board of directors that runs the company, and there are no specific mandates to such audit committee, risk committee to work strategically at issues specifically to those committees. So this was stressed by CAMA to ensure that all these are in place, and monitoring reports are to be provided based on the minutes, the deliberations on all of these activities. Also, the certification of financial statements by the CEO and CFO, confirming that internal controls and reporting reliability of those financial statements, and also compliance with laws and regulations are also in place and enforced. So formally, the CEO and the CFO just used to sign, but they don't certify in a statement that internal controls and reliability are their responsibility. So the current dispensation has stated that they are responsible for this and they must sign and attest to it. And ICFR coming is to test and ensure that the design and implementation of these internal controls that produces the financial report works. And also compliance with laws and regulations to detract or avoid sanctions is also the responsibility of the CEO and CFO, of which they must certify in the financial statements. And heavily I spoke to the Financial Reporting Council, or the Act, that was updated in 2023, a key update, very, very key, significant update. And this update was enforced in January 1st, 2024. So you don't just come up with an annual internal audit report. There has to be an ICFR, that is internal control over financial reporting engagement for public listed, public interest companies by the FRCN to ensure that key governance and ICFR elements are injected. So public interest companies, including listed companies, PLCs, entities with over 30 billion naira and above turnover, government entities, government-linked projects with over 1 billion and above are to comply to these ICFR elements and engagements. And also the CEO and the CFO are to certify financial statements and that ICFR has been performed. So the enforcement timelines, like we said, was from January 2024. So this is a key update and is examinable. It's a key update and is examinable. So take note of it. And this is to ensure stronger enforcement powers for FRC, and penalties and requirement for public disclosure. The FRC also have the powers to enforce. And that of the ICAN, the law is under amendment currently, and I don't think this is examinable until the amendments are passed. So ICAN's mandates and enforcement powers to help regulate further and stronger chartered accountants in business and in practice, to ensure that other professional bodies are allowed to perform their duties. So the lingering conflict with CITN is gradually coming to a close, which is part of the amendments that would cede to CIT and their powers on tax matters and ICAN either to concentrate on accounting and auditing services or also tax matters. So these are amendments and updates that are ongoing. Also, the significant one, like I said, is the ICFR, and the Financial Reporting Council has published the guidance on management reports on ICFR and also the guidance on assurance engagement reports. And the responsibility is for auditors to evaluate, report, and also test the design of the reliability and operationalization of the ICFR. So requirements for the internal audit and external audit assurance over that ICFR, which is tied to financial reporting, is key. And we spoke about the Nigerian Code of Corporate Governance, which has always been, and we summarized it in a table. So, like you said, it's a bit brief. I agree with you and summarized. There are documents I'll be sharing on some of these codes and some of these updates. I would suggest you go through them. Though some of them may be too long, they may be lengthy, the pages are much, but take your time to have an information. Just have some bird's view information of it. You may not need everything to be able to attempt the questions that may come based on these updates. But then just have an idea. I will share some of these documents on ICFR, some of the documents on those key updates. So please take your time to read them. Some of them are long, some of them are short. So you could be abreast with the facts and not just these summaries and bullet points or PowerPoints we provided to you. I hope, Sami, that will suffice when I provide it, aside this, my short explanation.
Yes, sure. Thank you so much.
All right, you're welcome. Okay, so this is 10:02. I already hope to start the question and answer today, but then I was quite very fast, but I didn't want to be too fast so that I don't miss some of the key issues on the units and the sessions for us to be able to grasp. So on Thursday, we'll start with all the questions. They are very much, and it's good we follow this approach. After each chapter, we look at the questions that relate to it and how to answer it, where was tested, what to do, how to answer, and all that. It's a good approach. And after this chapter, after we've looked at the past questions, we also need to look at one full diet past question. So we have 10 diets to look at. So after each chapter, we'll be looking at one diet down from November 2019. We've already looked at July 2020 up to November 2024. So we'll be looking down to questions we've not seen before, 10 diets. And the other diets are already on my YouTube page, so you could go back to them. But then most importantly, we want the past questions to resonate with us, the case studies, the scenarios, so that we'll be able to, as we are reading, as we are studying the text, we are getting conversant with how the questions are tested, so that we'll not be caught unawares. No matter how detailed you are with the study text, if you don't practice questions, it will be challenging to pass the AAA paper. All right, so having said that, aside any question and answer or any suggestion, any contribution, I would say have a lovely night rest and see you on Thursday.